Much, everybody. Again, that's all those questions. Some of them may be asked and discussed on stage in our next panel session. And so it's now my pleasure to welcome Andy Critchlow, who is the business news editor at the Telegraph in the UK, who has kindly flown all the way here to join us, and he's going to be moderating the panel discussion on stage. So welcome, Andy. Thank you very much.
Thank you, Diallo, and thank you to the Gulf Intelligence and to Fujairah for inviting me here all the way from London today. I must admit it's interesting as a journalist to come from what has increasingly become the disunited kingdom after our narrow victory in the Scottish referendum to keep the country together to the very united Emirates. And I think that Fujairah is a great example of the united spirit that embodies this country, and how energy is playing a really important part in that, and the wonderful pipeline that's now been built to bring the crude oil here to Fujairah that can access markets, and how that actually pulls the whole nation together. So it's really fantastic to see that. But I won't dwell too long. I'd like to invite for this session onto the stage Dave Ernsberger, Global Editorial Director of Oil at Platts, if you'd like to join me. Dr. Salem Abdo Khalil, Technical Advisor for the Government of Fujairah. Chris Bake, Executive Director of Vitol. And AmmarKutait, CEO of Socar, Aurora. Thank you, gentlemen. Energy paradigm shifting, traders in transition. That's the title of our panel debate here. Just to set the scene, a lot has already been said. A great deal of uncertainty, as we all are aware, in the world at the moment, whether that's here in the region, whether it's for me back home in the UK and Europe. Obviously, Russia and the Ukraine are very big questions that could affect energy markets over the next year. I think, to be fair, the world hasn't really fully recovered from the Lehman crisis back in 2008, and energy markets and commodities as a whole have had to adapt to that. And something as a journalist that has been very apparent to me, certainly covering the UK, is the extent to which all markets trading of any sort of physical commodity now is being scrutinized by regulators, by authorities. The need for greater transparency, greater clarity is absolutely vital. And what role does the energy industry here in the Middle East have to play in that story? And at the same time, I think the traditional models of IOC and trading companies are also being challenged. And the example of Vitol buying into Australian refining and downstream service station assets of Shell recently is a good example of that. And I'd like to hear more about whether you have plans to expand that model elsewhere in the world. But I think I'd kind of like to start off on the trading question, really, and possibly start with you, actually, Dave, on this. The European Commission has looked into this issue of how energy is priced, and the transparency at which energy is priced, and specifically looked at Platts and other companies that don't set prices but quote prices. Such as Argus and ICIS. What is the solution to this? To giving not necessarily the market greater clarity and greater confidence, but giving the general public greater clarity and confidence, because that was certainly lost through the financial crisis.
Well, yeah, thanks, Andrew, for opening up with my side of the shop here. I think the attention that's been levied on price benchmarks has been very valuable and very helpful. I think the conversation around how prices are formed in the wholesale oil markets, but also the wholesale gas markets, as we just heard a really interesting conversation about, is a great opportunity to talk about how those markets are fundamentally different from financial markets, how some of the characteristics that were there with LIBOR and other benchmarks that has some serious problems demonstrably aren't the same challenges that we face when we look at the physical commodity markets. And so the conversation around how do cargoes of crude oil trade, how do barges of refined products trade, how do pipelines of these products price in and out of the market has been a wonderful one, actually. Now, that's not to say there haven't been important questions asked, of course, right? I think the public's willingness to really look at any issue for particularly long is always one question, right? The more you get into it, the more people's eyes glaze over and the more they stop paying attention, frankly. And that's because I think the questions around physical commodity benchmarks are complex and important, but deserve also a fulsome conversation. From our point of view, I think always when you're looking to understand the value of a cargo of crude oil or a barge of a refined product, or really in any commodity, it's really important to be clear about the way the market's trading, who's providing the data, what the data actually is. And then I think if you can answer those first three questions, the value that's being published, whether it's a Platts benchmark or somebody else's benchmark, is a much more comprehensible thing to discuss. So we've welcomed the debate in the last, let's call it 5 years or so, and we think it's a valuable one that we're keen to keep on leading, frankly.
Ammar, if I could go to you next on this question. I mean, as someone who's been physically involved in actually trading energy and oil, do you think it's an issue? Do you think the EU are just looking really for a whipping boy to put on put in the stocks, as it were?
Well, I mean, clearly one of the main points is to have the proper benchmark, and I think we've been trying to talk to Platts and people, other companies as well, to start to properly price in oil products at least, because when it comes to crude, it may be more complex because of the more regulated type of things going on. But when it comes to refined product, you have more or less flexibility. And I believe that the region until now is not yet taking its role in terms of the pricing, because if you look at Rotterdam or Singapore or other major trading hubs, you will see that Fujairah today has more or less the same infrastructure, the same geopolitical or geographical maybe advantage, and a lot of products passing and a lot of investment going on around the infrastructure and so on. I mean, if you look at how Rotterdam started, Singapore, same thing. I still don't see why Fujairah is not being counted. I mean, if you look at the prices today, it's more or less Singapore minus freight, which is a bit unfair. The reason why we would like to see this first, because clearly there's been a lot of investment done, and in addition to that, if there is, in my opinion, of course, I will see what maybe Chris has more views to share, but if the pricing starts to take place properly on Arabian Gulf basis, it doesn't have to be just Fujairah, but clearly Fujairah is to be nominated as the #1 market maker, then you will have a lot of more liquidity and more transparency, I believe. And it will attract also smaller players, because, I mean, 15, 16 years ago, we started trading small amounts in Rotterdam. The fact that the market structured itself where you could have, I mean, the chain of supply was, you could jump on any part of the chain of supply because of the pricing, because of the infrastructure, etc. In Fujairah, you cannot, unless you're playing it super big, or medium big maybe, I don't want to say just super big, but there's a lot of players that we know would like to come and buy retail, for example, and if you don't have this barge market, which usually Platts reports in Singapore, in Rotterdam, in the US, Mediterranean, mainly this what's called the market on closure, which is a system very, I mean, traders are very familiar and I think accepted. If we don't have this, we will not be able to attract the retail, proper retail market Today, if you're a trader and you wanna, let's talk about bunkers, which is clearly fuel oil is a major part of the trade of Fujairah. If you want to supply bunkers and you don't have your own cargoes, etc., bigger level, there's no way you can do it. You must be part of a bigger. Your involvement should be in a longer part of the chain of supply. Let's put it. So I would really like to see or hear what Platts has to say, because we've been promised for the past couple of years many things. And so far, I see that Fujairah or Arabian Gulf still. Again, on crude, I understand. I know what you're going to tell me. But on oil products...
Is he putting you on, I think you've been put on the spot to open an office here.
I was going to say, maybe you could tell me what I'm going to tell you, because I'm still thinking of my answer there. No, actually, that's a great one to talk about. You know, in November last year, we put forward our proposals for the industry's response around the actual changes we will, in fact, implement in our spot Middle East price discovery process. And they regard things like cargo sizes and delivery dates. And we firmed those up earlier this year, and we're now proposing to go firm with them in early part of next year. So actually, that first critical change, formalizing the sizes of the cargoes and changing the delivery laycans we assess, are the first two concrete steps towards, I think, what you're asking for, which is flat price discovery in the Middle East. But of course, the trading community needs to do its part too, and to provide flat prices for price discovery, right? As long as the spot market trades as a premium to the netbacks, a premium to MOPAG, we'll of course assess the market that way, because that is the way the market trades. But by changing cargo sizes and slightly extending the laycan we're assessing, we're making some changes to methodology that we think will, based on the feedback we've had so far, allow people to show, and here's the critical issue, I think, show market value in a way that doesn't create too much exposure on the prompt side of the market.
Chris,
was that
would
what
you
you were
like
expecting me to say? Or?
I mean, for me, I think the issue has been we're getting to a point where I think we have the liquidity to be able to stimulate that type of market. I think historically the region has been a price taker rather than a price maker. That's predicated on a natural flow of product out of the region, I should say crude, not necessarily product, but a natural flow of product out of the region. I think there's been much more limited trade of products in the region, and that's also compromised partly by the fact that you have large national oil companies who supply their own indigenous demand, and you're competing with a market which is mostly subsidized. Mm-hmm. So it's very hard to have a free trade because the markets that people would buy for in the region aren't necessarily open to them, because they can't put product into that market because it's either regulated or it's subsidized. So I think now with the infrastructure available now and the very rapid change of the refining balances in the region, which are projected to continue, I think you have a much more fungible market, which will allow the conditions to set the parameters for efficient price discovery, where you can have a tradable market. I think the barge market for bunkers here in Fujairah itself, albeit still a derived price of Singapore quote, is a tangible place to start, because you have incremental demand which is dramatically affected by supply-demand balances in the region. So that kind of market, I agree with you, it's something that can be driven, and the conditions are there to allow it. Whereas I think even 2 years ago, or 3 years ago, you wouldn't have had that.
Do you think that there's a viable, and this kind of takes it off in a tangent some way, but that the UAE is a major producer, the Middle East is a major producer, it always strikes me why there isn't actually more physical trading here of oil and physical energy, and that all seems to be done on the market side. I mean, I think an interesting example of how that could change is what's happened in New Zealand with milk, which is their version of oil down in New Zealand, where they've set up last year the first dry milk powder futures market. And it's actually one of the few commodities markets this year that's done phenomenally well. And because they are the OPEC of milk production in New Zealand, it's worked very well for them. I find it very interesting that they're a major producer, but they've also captured this market potentially for trading that particular commodity. It's one of the few examples where you've seen that, really.
Well, I think you've seen the evolution. I mean, again, historically, national oil companies produce crude. They sold it on a reference price historically linked to WTI, more recently linked to an average of Brent, which has become the predominant price setter. But Dubai, with the CME, set up the Dubai Mercantile Exchange to price crude oil on a regional basis, for the very reason that because a trader woke up in New York and it was snowing, it didn't necessarily make sense that crude oil prices worldwide would trade up 50 cents a barrel. So to try and have a benchmark established on crude in the region, which was the most freely traded crude in the region was Oman export blend, and that became the benchmark for the DME. So I think you are seeing that trend, and if and when markets here get further deregulated, then the availability and the potential for third parties to come in and buy and sell product develops.
Are we eventually going to see the death of Brent?
Brent, I don't think we'll see the death. I think we'll see the evolution, and Platts is working hard in trying to generate the son of and the sister of Brent and continue to continue with that benchmark.
Yeah.
Dr. Salem, if I can come to you, what role can Fujairah play in this, in both providing more security for consumers in terms of pricing and in terms of security of supply, having all this storage here? I mean, one obvious point would be that if we have more storage, physical storage onshore here in the Middle East, then you remove the possibility that you're going to have a lot of oil floating around the oceans on tankers with nowhere to go, which I think that's where we are in the market at the moment.
First, on the point of the benchmarking, this is a move which we very much would like to support. I mean, the volume of of the oil which has been handed to Fujairah is growing enough in order to probably introduce the need for benchmarking, and the fact that we are an exporter for crude as well. Of course, it depends on ADNOC decision to price ex-Fujairah for their market. And then we have a lot of crude oil tankers coming. So again, this can be a platform for introducing the area to be benchmarking for the prices. The security which we are providing for the increased volume of storage, I think there is a demand, and the is a lot of trading is taking place between the tank farms, and the more the area, the more storage tank, the more the area has been identified for a hub for storage, and this attract more traders. So we believe that of course, we have limitations even in the land in order to attract more storage. I mean, at the moment, our total storage capacity is above 8 million cubic meter. By the year 1918, it will be probably up to 13 million. This sort of course need from us a lot of upgrades and sort of arts facilities in order to make sure that this volume is well handled, and there's no bottlenecks for handling of this volume. At the same time, our intention now is to try to diversify, going to refineries, going to petrochemicals. So our intention is to diversify, not only focus on storage.
Of course, it'd make a lot of sense to have gas coming out of Fujairah in some way. I mean, there was never any talk of building an LNG plant here and piping gas down here to Fujairah.
Yeah, I think this is an excellent move to have the LNG Emirate gas, which is even try to make the project is a permanent project. Before it was floating facilities, now it's inland storage facilities. The capacity is going to be 9 million ton, which is going to be improved to 15 million ton ultimately. This will not only provide the area with LNG for the energy and the power stations, but this can be an exit for us to provide the LNG bunkering service from Fujairah as well.
Right. Chris, if I can come back to you on what Vitol has been doing in the market to transform your business, and what that says about how traditionally perceived trading companies are adjusting to a new set of circumstances that we've discussed today. I mean, what was the thinking behind Australia and that move?
I think, I mean, we're not alone in looking at integrating our trade chain or supply chain. The IOCs have been incentivized for a considerable period of time to spend their capital on exploration and development. The capital pool available to them and the returns on capital have been historically much higher in that area. They have the resources, the risk appetite, and the capacity to take on these ever more complicated oil development, gas development projects. And the markets, the equity markets, have made the capital available to them to do that and haven't given them any credit for downstream distribution refining at all. So the exit from that market has been a long, steady road. For entities such as ourselves, for many of the reasons that have been touched on already, lack of liquidity in the spot market, the necessity to integrate into your supply chain, offtake chain, have meant that you've seen companies such as ourselves enter into the storage business, enter into the distribution business, and more recently into the refining business. It's not new. I mean, we owned refineries in 1990. We sold them in 2004, 2006. We bought some back over the last few years. We bought a distribution system in Africa. We bought Australia. And this is, I think, a trend which you'll see continue as our access to capital is structurally different than an oil company's access to capital.
Are you going to be heading to the UK at all?
In terms of saving the refineries?
Well, I think there's a few refineries that need saving in the UK.
Well, some of our friendly competitors are working on that, Milford Haven specifically right now with Critchlow. But there are some structural imbalances in Europe that need to be considered. I mean, these refineries are now, to all intents and purposes, underinvested for too long, and they're too small to be effective. And the 400,000 barrel a day refinery in this region, or the million-plus barrel a day refinery in Jamnagar, Reliance's refinery, they can compete too effectively and transship product, crude in and product out, too effectively to really allow some of these smaller refineries, Italy, some of the smaller ones in the Adriatic, and some of the export predicated refineries in the UK that were primarily sending gasoline to the US, which is no longer needed. And
I mean, how much of it is a case that the IOCs are really focusing, their capital, obviously upstream, but when they are looking downstream, it's all about China. They all have plans to roll out hundreds and hundreds of service stations every year for the next decade in China, massive refinery expansions in JV with China state oil companies, etc. And that, they're less interested in these legacy markets, almost like Australia. What do you think?
Yeah, and I just think it's a question of efficiency and return on capital employed. Their infrastructure and the way they have been historically set up, they're not geared to compete in these markets. And because they haven't been rewarded for participating in those markets for so long, they are taking their capital elsewhere.
Ammar, one of the questions that we had that was thrown out to the floor earlier in the survey to do with excess capacity in storage, and there are now too many plans, you could argue, for storage hubs in the Gulf, in addition to Fujairah. I mean, Fujairah, you have almost first mover lead on this because a lot of it's built, but in Duqm, Socar, elsewhere, do you think that we're in a danger of having too much of a good thing here?
I'll jump in.
There's part of the truth in this and part not, because if you look at Oman, some of the projects are intended for a specific flow of crude and products, so I don't think it will pose any danger to capacity in Fujairah. But yeah, there is definitely a bit of an overbuild. I think in certain, if we talk region, yeah, worldwide, maybe yes, maybe not. In Africa, there's a lot of shortages here and there. Singapore is being competed maybe by Malaysia a little bit, but they always tend to find more and more. I think the best chance for storage companies or terminal owners or operators in this region is the new demand that I believe can come. And this new demand will come because of all the new refineries. Chris spoke earlier about the refineries that are coming on stream or already came. And I believe some of the flow is starting to come. We started to see, I mean, for me, we started to see a lot of product coming from Iraq, for example, Kurdistan, KRG region. And more or less, we want Fujairah to be like the stopover point for blending or as an option just to store, because sometimes the traders don't see, they need to have an option on certain cargoes, but they don't know yet which market they're going to sell it, etc. So I believe even if the demand in China and Asia more or less drops a little bit, I don't see a major threat to the storages here, because eventually the product needs a home to stay in. So I think the overview is more or less not so positive, but definitely not negative.
Chris, do you have a view on that?
I think, I mean, yes, there are specific plans for incremental terminals. I think it's a fine balance. We do risk overcapacity, and as we all know, the problem with any commodity is it's priced on the marginal availability. So when there's marginally that much more tankage around, it affects the whole environment. It doesn't affect just that last participant. I think that's a problem, and I think that one of the big things that we have to consider, it's not just a question of building the tank, it's about the infrastructure that goes around that to support that. The oil services companies, the shipping agents, the massive infrastructure that Fujairah has today, to duplicate that is a huge challenge. And as it is a challenge for Fujairah to keep up with the demand of these new tanks. And it's no small feat. The massive number of ships that are at anchorage today, and the fact that that is managed and handled effectively is no small feat. And trying to duplicate that in multiple locations is, I think, complicated. So there are strategic issues too, as to where incremental storage is built for strategic reasons. Obviously, the UAE made a decision to allow a storage center outside the Straits, which was a significant strategic decision. How much more Oman/Saudi want to do in terms of that kind of security is obviously something that is being discussed.
To Salem, if I can come to you, I mean, on that point, I mean, the big issue here potentially is obviously Iran, and if Iran comes, strongly back into the international fold and a major player again in terms of attracting investment and the IOCs, and you get a lot of capacity coming on stream. I mean, presumably with what you have here, you could handle a lot of that Iranian crude, on their behalf. I mean, certainly the Omanis are talking to them about it.
Very much. Once the geopolitical tension is being eased there, then we will see more potential for the facilities which we have. But at the same time, as you said earlier, with UAE economy is very sort of familiar with transformation, is very much familiar with the competition as well. I mean, UAE is well known to be in the high index in the global competitiveness index, number 19 worldwide, jumped 5 points up. So we are conscious about other facilities can come, and for that we are over and above our natural and strategic location, which of course we have an advantage of that, and the leadership vision that of having a proper law and regulations, and all the time upgrading the facilities. We're putting that in mind, and we make sure that all the time we'll be ready to compete and to be the favorite place for the such storage movement. And of course, just like a food court, the more facilities you have, the more people come and more traders come and more link and inter-trading between the companies, and these further consolidate the area.
Dave, if I can come to you on this issue of unconventionals and what their impact on the market will be, and on this region and hubs like Fujairah. I mean, interestingly, I met recently with the governor of Ohio in London, of all places, and he was telling me that they're about to build, or there are plans to build the first refinery on the Ohio River for 35 years. Remarkable.
Sure. Well, I think the rise of tight oil in the U.S. has been a defining story of the last, call it 5 years. And it's interesting to me because with the price of Brent coming down as it has been recently, it just shows what a constantly changing world we're in, because that ought to be putting pressure on the refining margins in the U.S. Gulf Coast and in interior United States, which have been so compelling for so long that it would create the fertile ground for thinking of building a refinery or even expanding a refinery inside the U.S. And there's been a lot of that, in fact, in the last couple of years, a lot of debottlenecking and expanding going on. But yeah, tight oil has transformed the interior United States markets. It has made coastal refining exorbitantly profitable for anybody fortunate enough to have a refinery already in place down there. And I think it's made the U.S. stand shoulder to shoulder with Russia, China, and the Middle East in trying to drive these markets forward in a way the U.S. never did for the last 30 years. The U.S. was in a slightly defensive posture the whole time, was constantly thinking about where the next barrel of oil was going to come from. And it's given the U.S. a different voice, I would say. That may be the most long-term change that we'll see, is the U.S. has a different voice in this conversation.
But they're not going to ask to join OPEC.
I would doubt it, yeah.
Well, we're coming to the end of this panel now. I was supposed to put out a survey, some questions, but I think we've run out of time. But I have one question that I'm going to put to the panel, and you all have to answer with, just a sentence which basically answers against what I'm going to say. I'm of the view that oil could definitely be trading at around $50, $60 a barrel first quarter next year, if everything that we see transpiring in China comes to pass, and the geopolitical uncertainties ease, and Iran oil comes on stream, and Iraq starts to pump more oil. Why won't it happen, Dave?
Well, the U.S. will be producing 11 million barrels a day of oil next year, and at least half of that is pricing at least $60 or more. So it'll have to destroy all of that production to get that low.
Dr. Salem.
For unknown reasons, I would say.
I think I agree with David. I mean, the marginal cost of production now is just too high to. It's not to say that we won't dip down back to those levels we have in recent past, but on a sustainable basis between national budgets in this region requiring higher prices and the marginal cost of incremental recovery being much higher than that, I don't see that being a sustainable price.
I think the price will remain high because of the geopolitical situation. A lot of areas are causing stress to the market. That's one side. The other issue is that you have a lot of new discoveries, but they're not yet into the production also. If you're looking at Africa, a lot of projects, whether it's oil or gas. So some of the programs are also delayed. We all know that Iraq was supposed to increase its production. Not happening. Libya is off now, more or less. A lot of talks about other areas, but then they're never really coming. I mean, Uganda, for example, they found the crude oil. Tallow found oil. They've been in discussion with the government for like 3 years about a refinery. It's never happening. So I think this will be balanced off. There may be, I don't know if Chris agrees with my view, there may be going to be a lot of oil offered on the market, but the price will remain high.
Okay. Well, ladies and gentlemen, I'd just like to thank our panelists, Dave Ernsberger, Dr. Salem, Abdo Khalil, Chris Blake, and AmmarKutait. Thank you very much.
Thank you.
Thank you.